Hi, everybody. Welcome back to the Comstock channel. I'm Marlin Bohling with you. I'm joined once again by Relph of Comstock Investments. And glad to have you with us. Make sure you click on that link to subscribe to these videos, and also make sure you share these videos and be sure to like them as well. It really does help with the algorithm as we grow our audience. And boy, we grew the audience yesterday, Eric, as we talked about the big move in the cattle market. Late in the day on Monday, the cattle market crashed. And there was a lot of concern about the fact that we had a human case of avian flu that they believe came directly from the dairy cattle in Texas. So we'll talk more about that in just a little bit. Now, today, when you look at the overall ag market action, the grain markets were pretty weak in the knees, and the cattle market actually came back a little bit, but it wasn't as much as what it lost on Monday. So let's take a quick look at the grain markets here. What do you think happened today? Is it turning to the downside again, or what is this?
Yeah, I think, we alluded to this following the report on Thursday and touched on it yesterday. And I think today was just a reassurance that that was probably the right thought process, and that traders saw that report. The corn number specifically, as printed, was bullish. But when you looked across the board, it didn't seem that there was justification for the overall acreage losses. So then the trade has a tendency, if they don't believe it, they'll shrug it off. And I think that's what we've seen. Now we've taken back more than we put on following the report. We've taken out last week's lows in both corn, soybeans, and wheat, struggling as well. Double-digit losses in all three major grains at times today, although the corn didn't close down that far. I think it's traders trying to figure out what's the reality going to be and what does that mean to the bottom line at the end of this crop season.
So do you think this points to more downward pressure now? Do the recent lows need to hold to prevent that? What if they do give way?
Yeah, we need to hold recent lows. They're, back when the May contract was making a low of 408 and three quarter, we talked at that time that if it got salty, it could get to $4 and possibly take that out. Well, the March contract at that time did. So if these May contract lows that we posted, last month, if those give way, then we are looking at the continuation chart low, which would take the May down into the upper threes, and hopefully we could hold in that 385 to 395 range. I hate to say that number, but it is potentially possible if those lows don't hold.
Now, is there anything that can save this wheat market, do you think?
I'm not seeing it right now, Marlin. The conditions continue to improve. We had the highest condition rating in this crop progress report yesterday that we've seen since 2019 at that juncture. The general sentiment is that Russia and France are going to control the cash market. Although our exports aren't lagging what the USDA expected, it was just a low expectation, and we're meeting that. I just don't see what's going to turn the corner for the wheat from either a technical or a fundamental standpoint just yet. Now, things shift. The growing season's got a long ways to go, and we'll see what happens over the next month or so. Right now, it doesn't look pretty.
Beans, everybody was talking like beans would be on pretty firm footing, and here lately they don't seem like they're all that strong. What's going on?
No, you and I had talked about these estimates in South America, boots on the ground estimates from South America, leaning more towards the CONAB number or the USDA number than the CONAB number. And that continues to be the case. We have seen upward revisions from several different entities that are in Brazil, although a few kind of go in the other direction. So you're getting this back and forth. And at the end of the day, ultimately, all I can say is it's unknown still, but it doesn't look like we're going to have a widespread estimation in the 140s anymore. It looks like it's going to be in the low 150s. USDA may still be a little high, but right now there's nothing to prove that they are. And so the market's trying to figure that out at a time when we should have seen some peak export business. We didn't see it. Our exports are severely lagging in the beans. Not really a lot to hang our hat on there either. And if we do see a reduction in corn acres, obviously the beans would be the winner in some aspect there.
Well, I've had some people make the comment that considering the weather the way it is, yeah, there's a cold snap coming through the U.S. right now, but I got to be honest with you. I mean, I was driving up into central Kentucky last Friday, and on Good Friday, I was seeing quite a bit of corn being planted already.
Mhm.
I was a little bit surprised by that.
Yeah.
But considering how warm it has been, Yeah, it's going to get cold, but now with all the moisture, isn't that crop going to get off to a pretty good start in most areas this year?
Most areas, by all accounts, yes. It could be a blazing planting season for the majority of the growing regions. This could be a very successful start to the year, and this is where we could see some of this pressure come from. Now, if this system hangs around, dampens some areas to a point where it's not very conducive to field work, then you get follow-up rains behind it. Now we start talking a very different story, especially here in the heart of the belt, where even here in Clay County, Iowa, where I'm sitting, we have the ability to hold 11 inches of soil moisture, and we're full right now. So any rain, any subsequent rains that come moving forward can start going the other direction.
Okay, so it could be an interesting spring planting season, that's for sure. On the flip side of the coin, on Tuesday, we did have a bit of a comeback in the cattle market, although it looked for a while kind of dicey. I did
Yeah.
see some negative signs there for a while. It did kind of pull it out of the fire late in the day.
Mhm.
Is that something you can believe in now, that the market will go up and out of here again, or are you still pretty tenuous on your attitude here about cattle?
I'm definitely cautious. This situation is just too volatile, and when we had the species jumping of the avian flu, you get the goat case in Minnesota, then the cattle cases in Kansas and Texas, and then you find more cattle in other states. And granted, a lot of those other states that I'm talking about, that being Michigan, Ohio, Idaho, those cattle, those dairies and those locations had cattle that were brought in from some of the previously infected states. There still is no proof that it's being transmitted from between the cattle amongst themselves. But this is one of those things where fear is a strong motivator, and you have a lot of long positions that have profit that have been carrying for quite some time as this bull run has been going over the last couple of years. And so I don't know at what point they're going to sideline that money, and then it becomes a money flow issue. And if you get that liquidation from those long positions that have been established for quite some time, there's a lot of downside risk from here. So I'll be cautious and hopeful. And I guess that's where I'm at. I'm hopeful that this becomes a moot point. Cash recovers. We see at least steady trade with late last week. If we can get those things to come together and we don't have any further headlines or further intensification of this avian flu, then maybe we'll be all right. But right now, all it takes is another headline of humans getting it, or they find out that it is transmittable from cattle to cattle. You start getting it in the feedlots, or they start questioning the safety of the milk, or any of those things, and we've got a problem.
I sure did see a lot of coverage about that story in the national media, so it's kind of hard to overcome that once it gets established like that.
Right. It gets a lot of prying eyes, right?
Yeah, exactly. All right. Well, tell you what, we'll come back in a moment and we'll talk more about that. That actually opens up quite a few different avenues and maybe changes the way we should focus on our marketing. So we'll come back in just a bit and we'll talk about just that.
Livestock Risk Protection, or LRP, is a federally subsidized risk management program that ensures against a decline in livestock market prices. I'm Eric Relph of Comstock Investments, and we've been helping livestock producers understand and utilize this valuable program since it was launched. The program is available for all three major classes of livestock, including swine, feeder cattle, as well as live cattle. Contact us so that we can help you maximize your profits for your specific livestock operation.
Once again, I'm back to talking with Eric Relph about what happened with the cattle markets after that case of avian flu was discovered to have crossed over into humans. It still remains a bit of an argument how that happened. Did it come directly from a cow? Did it happen to coincidentally infect a human from somewhere else who happened to be working with the cattle? That's kind of a moot point. The story is that it's out there, and the story broke, and the market crashed. And when that happened, it really threw the market into a turmoil. Now, we had talked, I remember at that time, Eric, about the fact that it's kind of hard to stay ahead of the markets right now, but this year in particular, farmers and ranchers have some additional tools that they can use to maybe help cope with the volatility in the market right now. And one of those was LRP. Now, I have to admit, I didn't know much about LRP policies. You've been trying to get me indoctrinated in that, and maybe you can refresh the memories of our viewers out there too, in case they have some questions about that. Because we really need to learn about how this works. It seems to me that with the market cratering like it did the other day, and if it would cause a big downward turn in the market, wouldn't that raise some big opportunities for cattle producers out there that are using that?
Yeah, this is something that we need to be cognizant of at all times. The cattle market is very vulnerable, and oftentimes it feels like just looking for trouble. Then you have something like this comes along, and you go from making several $100s a head to losing several $100s a head in the blink of an eye, and go, man, why didn't I take advantage of that market when it was there to be done? And so LRP gives us a government subsidized deferred payment program that allows us to do just that. And I think one of the big things that maybe we haven't talked enough about is it leaves the top side open. So you're not locking in a price, you're locking in a floor with the ability to gain as the market goes higher. So there's a lot of advantages here between the subsidy, the deferred payment, the open ceiling, and the ability to customize it to exactly the size of your operation and the market targets for your cattle, both time and size. So it's very pliable and user friendly, and seems to work pretty well for just about any operation, especially with the recent changes. And by recent, I mean over the last couple of years from the RMA to the program, where we're now getting higher coverage levels on higher quality, and it's made things a lot more attractive for a lot of people.
What do you say to people that say, it's just a put option?
I would say it works like a put option, except for you don't have to give me any money today, and you get to get the same coverage at a cheaper rate. And for some people, one of the most unattractive parts is they can't trade it. But for a lot of people, that would be the most valuable piece of it. The hedge is in place and you can't get out of it. You just have to keep it until the cattle are sold. And so while there is a temptation to trade options and trade futures for cattle producers, backgrounders, feeders, oftentimes that's not the right thing to do. They need to protect their operation and ensure that they're going to have something to pass down to the next generation.
So you're actually choosing different time frames for coverage, is that right?
Yeah, different time frames depending on the turn of the cattle, what your operation is, the size that they're going to be when you get rid of them. For a producer who sells 500-pound animals, there's one option available. For a backgrounder that feeds them up to 800 or 900 pounds, there's a different option. For feeders that are buying those 800 or 900 pounders, we can go to fed cattle and insure those as well. And the great part about it is you're getting fed cattle done at 85% choice or better, which is pretty in line with reality nowadays because the animals are so big and they're grading so well. And in the feeder cattle, you can get higher floors for lower weight animals, just like the cash market. And there's formulas that work off of the CME Cash Feeder Cattle Index to facilitate the needs for any one of those size categories, as well as we have to, on the feeder cattle themselves, we have to specify which sex they are. And there's a formula that they use. So you're basically getting the coverage level of the steer price, whether it's for your heifers or your steers.
Can you walk me through an example? I mean, let's maybe take an example of, let's say a backgrounder producer who wants to use that program. Walk us through the different steps that he'll have to consider here.
So you have, say, a backgrounder buys some cattle, and they're going to feed 50 head of cattle for 26 weeks to try to get them up to 800 pounds. The expected ending price at the time when they take out the coverage, which is 26 weeks out, is $250 a hundredweight. So you can insure 99.9% or close to that of that 250 per hundredweight. And that's a $249.73 per hundredweight floor. And that's going to cost about $8.60 based on today's numbers per hundredweight. So you're talking $68 a head to protect those cattle at that floor. Now, most backgrounders are going to be making plenty good money at that price, and so they just have to put the pencil to it. A lot of times that $68 commitment can mean $200 profit, or in some cases, if you're a producer backgrounder, it can mean $300 or $400 profit. And then you get a little further down the road, and you come to the end date of the endorsement, and the actual ending price is 238. That's where your coverage level sets at the end date. Well, now you've got a discrepancy of 1173 times the 800 weight times the 50 head, and you come up with an indemnity owed to the client of almost $4,700. Now, the carriers are going to take out the premium prior to issuing a check, but even after the premium comes out, you've had your protection in, you had your floor in place, and you're going to cash a check for $1,252 in addition to selling your cattle at near the highest prices we've ever seen.
So how do you file a claim? Is that pretty complicated?
No, actually, it's very simple. The claim forms come out immediately following the end date of the endorsement. So say this happens and the 26 weeks goes by and this was the outcome. We would get a claim form and I would call you and say, hey, Marlin, I need the sales slip on those 50 head you sold 2 weeks ago. And you would email me the sales slip. We submit it with the claim form and checks in the mail within 3 or 4 days.
Really? Okay. Now, can that be sent directly to the producer? Does it have to go to their lender? Can it be a joint thing? How does that work?
In every one of my clients' cases, it goes straight to the feeder, to the background, or to the client.
So you've had some experience working with this for a while. What's the kind of feedback you've been getting here?
So I would say 90% of the clients that I've had utilize the program, whether it was just on a whim, say, okay, I'm going to try this, or they were just hell bent that they were going to stick with it because it just made the most sense because of the deferred payment and the subsidy and everything. I would say of those that have endorsed any cattle with me, 90% of them come back with every turn of cattle because the peace of mind that it gives them, the price of the markets that we've seen here over the last year and a half for sure, and the ability for this market to break, they're not going to leave a lot to chance. And so far, my feedback has been very positive. And I would say any of the clients that I've had go through the claims process would say it's easier than any other claims process you could go through.
What's involved then in getting set up? You had mentioned earlier when we spoke that it's kind of funny the way this works, that you can kind of sign up when the market is not trading, right? To do all the paperwork on this. How does that work?
So I can do paperwork anytime to get you signed up to be able to endorse the cattle. So there's 2 stages to this. One is the policy and the other is the endorsement. The policy is just getting the background work done and getting the paperwork filed with the carrier so that you can, at any time you choose, endorse the cattle. And actually, I was doing policies up until about 7:30 this morning, and I've been endorsing cattle up to the deadline at 8:20 a.m. Frequently. But the endorsements can only be done on your specific set of cattle that you're wanting to insure between 4:30 p.m. when the quotes come out from the RMA and 8:20 a.m. the next day. So it is quite different in that it only operates off hours and we have to wait on the quotes daily from the RMA. Then they don't come out till 4:30.
Now, a producer could do this, what, twice a year?
As often as they want.
Really?
Mm-hmm. Yeah.
How about for hogs? They can use this too, right? Swine producers?
Absolutely. We can do feeder cattle, fed cattle, and swine. And you can do unborns and live animals. You can do, in the case of cattle, you can do up to 600-pound animals in one category with a higher floor. You can do from 600 to 1,000 in a different category with a slightly lower floor because obviously they're bigger animals. And then you can do fed cattle. And we can pretty well cover anything from unborn to 1,500 pounds. And so it really encompasses the entire industry, and the same with the hogs, again, from unborn to slaughter.
Well, you're a good teacher, and I appreciate your patience. I know I'm kind of a newbie at this, so thanks for trying to get me started on this so I know the insides and outs. I know you had to go through a lot of training for this. if somebody has more questions and they want to talk with you about this realistically, about how to maybe put that in effect, how would they get in touch with you so you can talk one-on-one with them? Because you will do that, right?
Absolutely. Yeah. Anytime. I was actually, I've fielded emails from report subscribers at 6:30 in the morning, and I've talked to new clients at 8 o'clock in the evening, and I have no problem doing that. You can call the office up until 4 p.m. each day at 712-227-1110, or you can send me an email at any time at ericr@comstock.com. I would welcome any questions and hopefully have the insight that you need to try to make a decision for your specific operation.
All right. Well, I appreciate you spelling that out for us here this year. Things seem to get more complicated, but this might be a tool that might work for some people. And hopefully they'll give you a call and run their questions by you. Eric, thank you so much. Good to visit with you again. Eric Relph of Comstock Investments with us. That'll do it for this edition. I appreciate you joining us. For producer Brianne Hendrickson, I'm Marlin Bohling. We'll catch you next time on the Comstock channel. Thanks for joining us on our Comstock YouTube channel. Don't forget, you can also find us on Facebook and TikTok as well.